Ever wonder how much you're going to get from Canada Pension Plan and Old Age Security? Well, actually, it can be quite a bit, but it totally depends on your situation.
Here's something most Canadians don't realize. If your retirement income is just a little too high, the government starts taking back your old age security benefits. In 2025, that starts at $93,454. And if you don't plan ahead, you could lose every single dollar of your OAS. In this video, we're going to break down the #1 OAS mistake Canadians make, ignoring the clawback. We'll explain what the OAS clawback is, how it works in 2025, and most importantly, how to avoid it. What is OAS? OAS stands for Old Age Security. It's one of Canada's core retirement benefits, separate from the Canada Pension Plan. You don't need to work or contribute to receive it. It's a universal monthly payment funded through taxes. In 2025, if you're 65 or older and have lived in Canada for at least 10 years after age 18, you likely qualify. If you've lived in Canada for 40 years or more, you'll probably get the full amount. Here's what the monthly OAS payments look like in 2025 at ages 65 to 74, around $720 per month. Age 75 and over, around $800 per month. Those amounts are reviewed every 3 months and adjusted for inflation. What's new in 2025? The 2025 OAS rules have one big thing to watch out for: the clawback. If your net income in 2025 goes over $93,454, the government starts reducing your OAS through something called the pension recovery tax. This is commonly called the OAS clawback. The rate is simple. For every $1 over the limit, you lose 15 cents of your OAS. Your entire OAS is clawed back. That's up to $9,600 per year you could lose. Who qualifies for OAS? To get OAS in 2025, you must be 65 years or older, be a Canadian citizen or legal resident, have lived in Canada for at least 10 years after age 18. If you live outside Canada, you'll need 20 years of Canadian residency. Canada also has agreements with many other countries, which might count toward your time in Canada. You can check these at canada.ca. What is the clawback? The OAS clawback is officially known as the OAS pension recovery tax. It's a tax the government charges if you make too much income in retirement. Let's say your income in 2025 is $100,000. That's $6,546 over the threshold. Multiply that by 15% and you'll have to repay about $982 of your OAS in 2026. The #1 OAS mistake: ignoring the clawback. Too many Canadians think OAS is guaranteed. But if you don't track your income sources, or if you delay planning, you could lose most or all of your OAS. This mistake often hits professionals with high pension income, business owners withdrawing large dividends, retirees making large RRIF withdrawals, seniors selling investment properties or stocks in bulk. They cross the clawback line without realizing it, and suddenly, OAS starts disappearing. Real example: let's say Sharon is a retired dentist. In 2025, her income looks like this. CPP, $1,100 per month equals $13,200 per year. RRIF withdrawal, $40,000. Dividends, $20,000. Rental income, $25,000. That adds up to $98,200. She's $4,746 over the clawback threshold. So she'll lose about $712 of her OAS. If she had structured her withdrawals differently, like pulling from her TFSA instead, she could have avoided the clawback entirely. How to avoid the OAS clawback? Let's go over some practical ways to reduce or avoid the OAS clawback in 2025. 1. Maximize TFSA withdrawals. Your tax-free savings account is your best friend. Withdrawals are not taxable and don't count as income. In 2025, you can contribute $7,000 plus any unused room. If you've been contributing since 2009, your limit could be over $100,000. Use this money for retirement income before tapping into RRSPs or RRIFs. 2. Manage RRSP and RRIF withdrawals. If you expect to get hit by the clawback later, start withdrawing RRSPs early, even before you retire. This is called an RRSP meltdown strategy. The goal is to reduce your future RRIF balance so the mandatory withdrawals won't push you over the OAS limit. If you have a younger spouse, you can also base your RRIF minimums on their age to lower your annual withdrawal. 3. Income splitting. If you're married or have a common law partner, you can split eligible pension income. That includes RRIF income. Some private pensions, you can move up to 50% of your income to your spouse to keep both of you under the clawback line. You can also do CPP pension sharing. A portion of your CPP can be shared with your spouse. It doesn't reduce your total CPP, but helps balance taxable income. 4th, plan capital gains carefully. Selling a property or cashing in big on investments? Do it in a low-income year or spread it over multiple years. One-time gains can destroy your OAS eligibility if they spike your income too much in a single year. 5. For business owners, balance salary and dividends. If you run a corporation, be careful with how you pay yourself. Dividends are tax efficient, but they're grossed up when calculating income, which means they can make you look richer on paper and push you over the clawback line. Sometimes, it's better to pay yourself a reasonable salary, contribute to CPP, and structure dividends wisely. Also, if you have access to your corporation's capital dividend account, use it. Capital dividends are tax-free and don't count as income. Should you delay OAS to age 70? Yes, you can delay your OAS up to age 70. For every month you wait after turning 65, your monthly payment increases by 0.6%. That's a 36% boost if you wait the full 5 years. There's no bonus after age 70. Delaying OAS can help in 2 ways. You get a higher monthly payment for life. You buy yourself time to lower your taxable income. But don't wait blindly. Make sure it fits your situation. If you expect to live well into your 80s or 90s, the math often works in your favor. Recap. Key takeaways. Avoid the clawback by using your TFSA, planning RRSP/RRIF withdrawals, using income splitting, spreading out capital gains, balancing salary versus dividends if you're a business owner. Don't make the #1 OAS mistake, plan ahead and protect your retirement income. If this helped you understand the OAS clawback in 2025, give this video a like and subscribe for more simple, clear retirement info made for Canadians just like you.